EY has released the results of its Festive Season Retail survey. Derek Englbrecht is in studio to tell us what the survey reveals. Good to have you with us as always, Derek.
Thank you very much.
Interestingly enough, you were anticipating that this year's fourth quarter retail sales figures will be a lot more exciting than what took place last year. How so, given the sluggish growth, the ongoing strikes and the depressed consumer environment that we always hear about?
I think it's very important that one understands when you compare this year with last year what was in the base. So last year this time I think we were not particularly optimistic about some volume growth into the fourth quarter. This year I think in this last 3 or 4 months we've seen really two things which I think has an impact of putting money back into people's pockets and possibly translating into some retailers' optimism. I guess the one is we've got an industrial strike that's come and gone end of second quarter, beginning third quarter. And then we've also seen a fuel price, which I think has benefited the man in the street. Doesn't make you rich, but it certainly puts some money back into your pocket when it goes into the fourth quarter of this year.
What about the impact of the weaker rand? Many of the products that we buy through retailers are imported. That would have bumped up the prices?
Absolutely. So I think what we also have seen is that retailers tell us that they've seen selling prices accelerate much faster in 2014 than in 2013. And I think that talks to the point that you make, Alec, that imported cost component of the depreciated rand is now probably fully discounted into the base of many of those products that are imported. I think the benefit of having a dollar price for crude oil has obviously turned in our favor as well, because there the lower dollar price has to a large degree been offset by that same depreciating rand effect.
The problem is it's only 50% of the petrol price is actually the rand price of oil. The rest is taxes that we are paying there. But maybe we could explore this a little bit more, because we've had a lot of depreciation in the manufacturing sector around the world. But so the prices of the products in dollar terms might have fallen, but of course with the rand falling, it would have a negative impact on the prices here. Do we have any sense on what's happening on the shop floor when you say the retailers believe the prices have gone up of imported products? By how much?
I think it's very difficult to put an absolute number on it. I think one also needs to be cognizant of the fact that part of that depreciating rand is actually an appreciating dollar, as we've seen the quantitative easing effectively stripping most emerging market economies from the purchase price parity of their currency. But you're quite right. So I've seen some products and I've spoken to people where I've literally seen a 400 rand increase on a 1,000 rand product year on year, and I can tell you that the product that I'm referring to is no more innovative, doesn't even look different, etc., etc. So it shows you that it does creep into common day products. Arguably, some of those products were bought at a much lower price, but who knows? That's the game that the retailers play.
With interest rates expected to pick up next year, could this potentially be a once-off?
I think we are arguably in the beginning of an interest rate tightening cycle, which concerns me from a cost of servicing debt perspective. So whilst the Reserve Bank has a very fine line to walk between stimulating growth and being looking after the inflation rate in particular, there is probably a point to make that most debt will cost you more to serve in 6 months from now than it does today. So that's certainly one of the headwinds which I think will impact on the ability of this sector to stimulate and grow to its full potential.
There used to be a time that everybody received Christmas bonuses, and we know the economy has been struggling, and we know that companies are no longer doing it as a standard practice. In fact, independent newspapers announced, I think it was last week, that they're not going to be paying Christmas bonuses to shock horror at that company. Is that coming or starting to be effective now in retail sales numbers?
Look, I haven't seen numbers that would suggest that that's the majority of companies' view. I think the 13th check or the Christmas bonus are always seen as almost an employer making it easier for you to save throughout the year, and then giving what you were entitled to at the end of the year in any event. And maybe many companies have actually walked away from that by just putting money in people's pockets on a monthly basis, rather than try and set you up for failure, so to speak, at the end of the year.
But it was a culture in South Africa, and that culture seems to have waned.
I think it probably waned, which I think doesn't help retailers having such a cyclical exposure to this last 6 weeks of the year, because quite frankly there's just not such big or deep pockets as there may have been 4 or 5 years ago. I think that also accounts for the festive season starting earlier and earlier, because there's no point in waiting until people get the traditional bonus on the 15th of December. And maybe that's why the shops start transforming by the 1st of October these days.
So what are consumers spending money on or anticipated to spend money on in this quarter?
So this is a bit of a gut feel. The survey seems to suggest that non-durable retailers will see some volume growth on the back of putting money back into people's pockets. Some of the semi-durable retailers have continued to report a slowdown in sales volume growth since the second quarter of this year. And we've seen some of the durable retailers tell us that sales volumes are marginally up, but one obviously needs to factor in that they've been in the doldrums for 3-4 years. So the base that they're comparing it against is quite low. But my personal suspicion is that people will probably favor experiences and products and services, which gives you a very quick bang for the buck. So I spend it and I feel good about it. And whether that's a restaurant experience for the family or whether that's a decent piece of clothing, I doubt whether people will spend huge amounts of money on furniture, because you don't feel good about buying furniture the next day. And I'm speculating that maybe those products and services which gives you a good experience will probably be the kind of things that people will spend their money on disproportionately.
Holidays are good experiences. Is it going to be the same as always, and pack up the car off to the coast? And I ask this because clearly in the coastal regions or the holiday regions, retail sales for them over the Christmas period is a big percentage of what they do in the year. What's your feedback from that area?
So just based on some anecdotal asking friends and colleagues, I think that fewer people are planning the 2 or 3 way break to a coastal city than maybe a year before. I think people have got to the point now where they can almost buy double the value if they go away in September or August. So suddenly you have people changing the way that they go on holiday. But no doubt all of the small coastal towns will be flooded by lots of people. And you know, if the weather is good, I guess people are in a good mood to spend, and that bodes well for them if they've adequately prepared.
But from your survey, are they as optimistic as ever? Having been down the south coast of KZN at this time of the year, you can hardly find parking. Is it the same way for the retail shopping centres?
Yes, very much so. So they have a big, probably the most important 3 weeks of their year lying ahead. And I guess as we've all had experiences in some of those coastal cities, if they plan well and they buy the right things at the right price, I think you can literally make all of the money that you could have possibly wanted to make in the year. But if you've got it wrong or you've got the wrong product, I'm afraid to say you'll have to wait another 12 months before people will come back and buy the same thing.
High risk, high reward. That was Derek Englbrecht, who is the Retail and Consumer Products